All right, so it's about the harmonic trading pattern, and then popularly called the PRZ, price reversal zone, price reversal zone. Okay, so the agenda for today, for the program today and tomorrow, introduction and definition, A, B, and CD pattern. Well, I may not really deal with A, B, and CD pattern as much, because we would have found multiple opportunities before. So skipping the 2 and 2 pattern, we'll skip it. We'll go straight to Gartley, Bat, Crab, Butterfly, Cypher, Shark 5.0, and then question and answers. Well, somebody will be wondering, where are these names coming from and the rest of them? They were given to it by one man. He's still alive, yeah, so he named them. That is really why I do not pay so much attention to nomenclatures. Nomenclatures, I mean the names of whatever anybody call anything. If you don't know why and what it is there, knowing the name might really not help you. So the science of trading is a class like this. The art of trading is what brings you profit, which comes with practice. All right, you need to practice these things over time and then become skillful at it. So we're going to be doing with the science of trading, while the art of trading is what we do in the mentorship program. The mentorship program has been very robust and very amazing. It's important that everyone is part of it. And then we are introducing this new program to it, combining it with Harmonic's pattern. Whatever we do in where you learn the art of trading equips you strongly in relation to price action. And when we talk about price action, we do not see price action as Japanese candlesticks. It's unfortunate that a lot of traders think that price action is understanding Japanese candlesticks, where you talk about Marubozu candle, you talk about engulfing, you talk about harami, bullish and bearish harami, spinning tops, dojis, and the rest of them. I mean, for crying out loud, a lot of you would have gone through all those stuffs, and then you are still not confident about your trading skills. You are still not confident about your trading skills. Let me ask a question. How many of you have gone through, let me give an example, baby pips? You've gone through baby pips largely to a point where you feel that, now you understand what the market is, these charts. You've gone through baby pips, just type 2. Maybe you did not finish it, but you've gone through it largely and then studied some healthy points from baby pips, and then you feel comfortable as it were in your mind. Oh, thank you, Bosco. Thank you very much, Bosco. Who else have done baby pips? I read through baby pips about 7 times, back to back. Oh, Temitope Ojo, thank you very much. All right, so for those who have responded about baby pips, after I finished baby pips and then went on to gain confidence, did the confidence deflate? I mean, did you realize that it be like say the thing passed baby pips? So Merua, good luck. How do you feel? Do you feel like the thing, there's more to the market than what baby pips is offering? If you think so, now type 3. If you think so, now type 3. That there is more to what the market, okay, thank you, HP. All right, Bosco, good. Okay, so all of those as well that are responding to baby pips, that have gone through baby pips. Baby pips is a very wonderful website. It is one of the websites that actually solidified my basic foundation. So it was later on when I realized that the market was beyond baby pips, then I now understood the name of the website in the first place. The website says baby pips, baby, B-A-B-Y, baby, not adult pips. So if you have not even known as much as baby pips, then you have not even started. That's what they are telling you. But if you have now gotten baby pips, you have read through baby pips from beginning to finish, now you are now a baby trader. That's what it means. So it was now, and I started asking myself, come on, deflate your pride. You finished baby pips and started feeling like a champion. And that was why it wasn't long after then I blew accounts with all the knowledge that I blew accounts. So all they are trying to tell you is just like a baby that is trying to walk. See, you fall several times, you fall multiple times than the rest of them. Okay, so here, but if you go on Baby Pips, you will see price action, you will see this, you will see that, you see a lot that makes you feel that you now know what you're doing. All right. So we want to advance from Baby Pips to Adult Pips. We want to advance from Baby Pips to Adult Pips, where you learn the art, A-R-T, of trading, not the science of trading. Where you learn the art of trading. You learn the art of trading. Your confidence is set on a different pedestal, on a platform that is unwavering. All right. You know, so I know that there are a few of my mentees, mentorship students here and all of that. You can reach out to them, find out from them. They will tell you that they are learning the art of trading and their confidence is built courageously. So get ready. It's going to be a ride tonight. We're talking about the Gartley. We'll be talking about the BAT in a couple of minutes. All right. So I beg you not to be distracted. It will set a foundation for us. It will set a very good foundation for us, you know. It will set a very good foundation for us. Harmonics is a process of identifying the market's rhythm. Harmonics is a process of identifying the market's rhythm. The market has a rhythm. The market has a rhythm. I was speaking with one of my students yesterday, those in the mentorship class. He called me and it was like, TVHM. I said, yes. He said, this market has started talking to me. I said, really? He said, yes, I can hear it. I said, that's great. That's exactly where we are going. And it will come to a point where even in your sleep, it will communicate to you. He says in the middle of the night, it will open your ears and seal it with instruction. So whether daytime or nighttime, it has a rhythm. For instance, you cannot begin to dance blues where they are playing reggae. And the market has this dynamism in its rhythm that today it can be playing blues. The other day it will be playing reggae. The other next time it will be playing jazz. It is up to you to understand the market rhythm. And one of the things why we study, so we don't pick topics to treat. Hello, I don't wake up and pick a topic to treat. Oh, TVHM, let's deal with Bollinger Band tomorrow. I'm sorry, but what's Bollinger Band? TVHM, let's deal with moving averages tomorrow. Are we studying what? The market has a rhythm. Let's study market rhythm. Let's go. Because that is the underlying foundation to knowing where the market is going. When you know the market rhythm, you have solved 80% of your market success. So let me encourage you one more time. Maybe you've given up, or maybe you've lost hope. I'm talking to people here who believe that they can make it from the Forex market. Not by cunning means or whatever means, no. By trading and knowing the science and the art of trading. And not every lecturer or teacher of Forex knows the art of trading. They know the science, but they don't know the art of trading. Anybody here can actually read up this slide and go and teach it. Yes. I can make this slide available and anybody can take it, go and teach it. But come and demonstrate it on the chat, then we will know whether you understand just the science or you know the art itself. And many a student have taken off with the science alone and feel that they can actually learn the art themselves. Nobody has mastered an art by himself. Nobody. Nobody has mastered an art by himself. So when we get here, we say that harmonics, that is why it is a harmony. It is a harmony. This has to connect with this. This has to connect with this. So we call it harmonic pattern. A process of identifying the market's rhythm and exploiting its trade opportunities. Harmonics patterns are defined by specific price structures that are quantified by Fibonacci calculations. Yes, this is the scientific definition. When we get to the art class, you will bring out your compass. You will bring out your compass, play around it, and get it right. And I want to assure you that this session is different from what you have ever seen. No, I can guarantee you that. And if you have been down, it's an opportunity for you to rise again. It's an opportunity for you to rise again. Can somebody say amen? Oh, I already see Bishop Ambrose have typed a full passage of scriptures there. Thank you very much, guys. All right, so we go to Fibonacci ratios. What is this Fibonacci? Fibonacci, of course, is the name of a mathematician that developed some stuff in mathematics that we now adopted into trading. But there are two major ratios we use, the 61.8 retracement and the 38.2 retracement. When you divide this by 100, or multiply it, sorry, by 100, you'll get 61.8, approximately 62. And the other one, 38.2, approximately 38. All right, so we are not talking about exact numbers here because this is not a mathematics class. It's about, listen carefully, it's about the harmonics, the pattern that was created by harmonics, a market rhythm that created a pattern. So it is not about figures. So I really do not expect you to cram the figures, but if you are that smart that you can pick the figures in your head, in your mind, oh, very great. So derived ratios, there are a lot of derived ratios. You can skip what is equal to. This is the science of the class. For the sake of those that appreciate numbers and science figures and the rest of them, I put all of these things. I am an engineering student, but not everybody. Okay, so I like to know how these numbers came about. Like, did they manufacture it from their head? No. So just in case you fall in that category, you want to know how these numbers were manufactured, then you can see this page, very interesting. But before those who do not find mathematics interesting, don't get sleepy. Forget about this. Like what I mean, forget about square root of, fourth root of, square root of this, 1 minus 0.618 or exponential 2, and blah, 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 blah. Forget about that before it makes you begin to feel like this class is not for you. Right? So that you don't feel that this class is not for you. So whether you are a math student or not, all I want to let you know is that there are other ratios, all right, like the 78.6%, which is called 0.786. We have the 88.6%, which is called the 0.886. We have the 1.130, which is called the 1.13%, right? and then on 1.27, and then of course I've mentioned 38.2, then 50.0, 70.7, 141.0, 2.0, 2.24, 2.618, 3.142, 3.618. All these are derived ratios. How were they derived? You have it to your right for those who are interested in how these values were derived. So they were not just dropped from heaven. However, let me emphatically state again, the harmonics itself is far more important than the numbers. Because when we get to the art of trading, which is what brings profit, all right, it's not about numbers. You have to look at the dynamics of what the market is playing at the time. So it will just be ranging around these numbers, but not exactly on the numbers it were. So take note and follow me. So where do we put these numbers? That will be on the next slide. We use the Fibonacci tool. So I'm going to show you an example of the Fibonacci tool. Let me go to my chart very quickly. All right. So I prefer to work here than to work on slide. When we do slide, it's like we're doing science. When we come down here we do art. All right. So there is a tool here that is confirm that you can see my chart, guys. Confirm with 1. Type 1 if you can see my chart. Beautiful. Thank you, Anthony Siriakos. Good to have you here. All right, so now there is the Fibonacci tool up here. All right, just in case you don't have it, if you hover your cursor around it, you will see it F. You see F by the right end of it. Okay, so I pick the Fibonacci tool, I click, hold, and I drag. I click, hold, and I drag, and I have a lot written on it. But let me set it to default, the way it will be on your own device when you first meet it. Go back to default. Where is default? Okay, default. All right, okay. So this is what you're going to see. 0, 23.6, 38.2, 50.0, 61.8, and then 100. There is 100 there. That's it. All right. There's 100 there, 161.8, and going down to 61.8 and all that stuff. So how do I now put some Fibonacci ratios on it? These are some Fibonacci ratios. So I double click on the Fibonacci tool, right click on it, and then go to Fibo properties. You can actually use is it view now? Insert? No. Okay, sorry. On your chart, if you right click on your chart and click object list, you see the Fibonacci. You click edit. Click on the Fibonacci and then click edit. Aha, so now you see the Fibonacci properties will come up for you to edit it. Okay, so now I hope you can see what I'm doing. All right, so now we want to edit it. We already have some Fib ratios, 23.6. Well, for now, let me be giving you the ones we don't need. 23.6 out, delete, I don't need it. 38.2, I need it. 50.0, yes, we need it. 61.8, yes, we need it. How about 78.6? So to the right of level, you put 0.786, and to the left, I'll put 78.6. I click add again. I have 0.886 to the right, 886 to the right, and to the left under description is 88.6. Okay, and then you continue to add. You can add again 1.13. It's another Fib level. I showed you all of them, and here it be 113. I add again 1.27. And at this point, it will be 127. I add again 1.41. And here it will be 141. I add again 2.24. And then here it will be 224. I add again 2.618. And here it will be 261.8. All right, 261.8. And then I add again 3.618. And here I have 361.8. Okay, and I think that's the last of the Fibonacci numbers. I've had them in my head for many years. So yeah, that's all. Do we have 113? Did I put 113? Yes, I did. So you click OK. You see all the values will appear. That's all. Now you have set your Fibonacci levels. That's quite a lot of numbers. That's quite a lot of numbers. But just in case you are finding you want to know how these things are added, this is how we add them. So if you also want your Fibonacci to give you the price levels immediately, so that you don't have to now come, say you are looking for the price level of 100, you now use crosshair and be looking for it. You can still go to edit it. Remember, right click, go to object list, because it's an object. You click on the Fibonacci tool that is on your chart and click edit. So when you click edit, you can now go to the under description. Under description, we now begin to add, you can give a space, or for me, I normally will put greater than sign, like 3. I'm just trying to add something, not like greater than works anything. No, the thing that works is percentage and dollar. Percentage and dollar. All right. So take, for instance, I can just give space here and put percentage and dollar. That is what works. But so because that percentage and dollar will give you the price level, so that the numbers don't mix up. That's why I'm adding something. All right. So I could just add anything. I put percentage and dollar. Please note, it is the percentage and dollar that is important, not the greater than sign. All right. The greater than sign is just to create space between the price value and the value of what I'm doing, of the identifier there, percentage dollar. Let me just OK, and let's see what I'm talking about. You see that? That's exactly what I'm talking about. It brings out the price value at 0, the price value at 38.2, the price value at 50, the price value at 61.8, and on and on. You keep putting in. I can add for 78, and on and on and on. All right, then. So I have set my Fibonacci tool. I have set my Fibonacci tool. Okay, so now we have done that. We're back to our slide. I said we'll skip 2 and 2. Let's go to Gartley. Gartley being the first. The Gartley pattern. Gartley is a pattern. So the patterns, the harmonic patterns are divided into 2. There are continuation patterns and there are reversal patterns. Continuation patterns and then reversal pattern. A continuation pattern will simply mean that price was previously going up, for instance, and then made a retracement and wants to continue up. That's a continuation pattern. It was previously selling and then made a slight retracement and now wants to resume a sell. That's a continuation pattern. Why a reversal pattern will mean that price is buying and now it wants to change to a sell completely. So we'll come to study that. So we have continuation patterns and we have reversal patterns. And the 3 major continuation patterns, which we will deal with today and tomorrow, because we'll not be able to get into the reversal patterns. But all the patterns are here, like I mentioned. So I'm going to show you the Gartley pattern, the BAT pattern, and the cipher pattern are continuation patterns. The Gartley, the BAT, and the cipher are continuation patterns. When they appear, what it means is that you are in a market that has an already established trend. The direction is already known. While the crab, the butterfly, and the shark are patterns that help us know that this trend is over. Because some people have asked me severally, TVHM, how do you know that this trend is over? It is known by the crab. The crab harmonics reading, the market reading of a crab, the market reading of a butterfly, and the market reading of a shark 5.0 are tunes of market reversal. When these guys play, it means the market is switching from blues to reggae, or from blues to jazz, and vice versa. But when the harmonics play in the kind of a Gartley, in the kind of a BAT, and in the kind of a cipher, it's just a temporary pause and then a continuation. A temporary pause and then a continuation. Okay? Yeah. So I hope that is clear. Did everybody get that? You got that type 2, please. You got that clear, type 2. You with me, type 2. Beautiful, great. Thank you. All right. So let's start with a Gartley. A Gartley, therefore, is defined by these parameters. This is a bearish Gartley. You can see the direction is to sell. It begins with a leg called X leg. Then it goes to a leg called the A leg. You can see the swing from X to A is even larger than A, B, C, D combined. So this tells you traditionally that the market is downward. The XA leg tells you traditionally that the market is downward. So one more time, the reversal patterns are crab, butterfly, and the shark. But the continuation patterns are the Gartley, the BAT, and the cipher. So let's pay them 3-3. So we have 3 for continuation and we have 3 for reversal. Good. So we're talking about the Gartley here. What makes the Gartley unique, and where does the Gartley, how do we know that this is a Gartley? A Gartley will start with an X leg. Of course, all the patterns begin with an X leg. But you see this X leg is the beginning of every pattern, and the D leg is the end of every pattern. These 2 legs, X and D, are the most important part of every harmonic system. You're starting and you're finishing. If you miss the X leg, everything else you are drawing is wrong. And how people draw these things are amazing. I'm going to show you tonight how to accurately get your X leg. All right, traditionally how to accurately get your X leg. I'll show you tonight. I'm not sure if time will permit us to show you how to accurately get your D leg, to confirm your D leg. You can accurately get your D leg, but there is something else you need to confirm that this is the D leg. So that the hand of a man in a soup will not be mistaken for the hand of a monkey, or the hand of a monkey in the soup pot will not be mistaken for the hand of a man. So when you are selling or buying, your X and D legs are very critical. Let's go. So we say that this is X to A, no measurement. A to B gives you a measurement of about 61.8. So I want you guys to take note of this. I'm giving you enough time to draw it or snap it, take a shot. You can take a shot, because I'm going to be asking you questions as we go to the chart right now. You're going to be giving me these values. You're going to be giving me back these values. All right. Then B to C says it's 38.2 to 88.6. Then C to D says it's 127 to 161.8. Then X to D says it's 78.6. All right. So we're going to check and see what this is all about. All right, this is a bearish Gartley. We're going to find a bearish Gartley or a bullish Gartley. In the same vein, this is a bullish Gartley, so you can also take a shot on it. It's just the reverse. X to A free, 61.8% from A to B is the retracement of X to A. When you draw your Fibonacci from X to A, that's what it's saying. If I take my Fibonacci tool and draw from X to A, B should come down to 61.8% of X to A. Listen carefully. If I draw my Fibonacci from X to A to get the B retracement, you can see that B came down 61.8. It's below half of X to A. That is why it's more than 50. It's 61.8 of X to A. That's what that means. Then, when I draw from A to B, I must follow the sequence. You cannot draw from B to A. You cannot draw from A to X. So this drawing also have made a lot of people get their wrong calculations in trying to understand Fibonacci. So when drawing, you begin from the X. X we draw to A to give you B. Then you check A to B to give you C. A to B to give you C. Then you draw from B to C to give you D. Now you can see if I draw from B to C, D is an extension, not a retracement, because D is longer than B to C. D is an extension of B to C, not a retracement, because D is longer than B to C. That is why it is now giving you 127 or 161, 1.27 or 1.618. You get that to 1.618. So that's exactly what we are seeing there. All right. Similarly, so that's how we draw. We're going to find this. It's a pattern created by harmonics, done by mathematical calculation. Have you gotten the values? Can we go to the chart right now? If you got the values, just type 2. So we go to the chart. If you got the values, type 2. So we'll go to the chart. Thank you. Thank you, Wilson. Thank you, Joe. All right. Thank you, Omotolani. Thank you, Bosco. All right. Thank you, Godspeed. Thank you. Good luck. Godspar, sorry. All right, so let's get to the chart. I'll be needing these values shortly, please. So I need you to give them to me. Okay. Let's take a look at something, friends. Let's take a look at something. If you are in this class, please respect yourself and turn off your microphone. You can't be in the marketplace and then turn on your mic. Hello, just help us. Thank you. Yeah, B to C is a range. B to C is a range. B to C is a range. So let's take an example here. C to D is also a range. Yes. Now, I want to draw my Fibonacci. Let me look at something here. So I am doing this from this high to this low to this high. Okay. And then I'm doing from this high to this low. Okay. This high. Lord God Almighty. Should I remove this person from the class? I keep muting him. He keeps on muting, and he knows that where he is noisy. Maybe I will, if your mic turns on again, one more time, I'll keep you in the waiting room for 10 minutes. Where your environment is noisy and you keep on muting yourself. I mean, it doesn't make sense. All right? Okay, so let's get going now. Oh, this is not a Gartley. I want to look for an example of a Gartley, and then we take their example. All right. Let me just try something here. So let's look at this. From this high to this low to this high. And then from this high to this low and probably back to this high. Does it look like a Gartley? Let's look at the Gartley pattern again, one more time. This is a cell. So let's look at a cell Gartley one more time. This is a bar, this is a Gartley. So a Gartley is a W pattern with the second leg, that's the C, slightly higher than the A leg, right? And the D is a retracement of XA, not an extension. So D is not higher than X, C is higher than A. So C is higher than A for a bearish Gartley, and D is a retracement of X. So let me put it in clear technical terms. C is a retracement of AB, and D is a retracement of XA. Simple. C is a retracement of AB. So whether it is bullish or bearish, if you go to bullish as well, C is a retracement of AB, and D is a retracement of XA. They are not extensions. So we look at the bearish again. C is a retracement of XAB, and D is a retracement of XA. So let's go back to that chart and look at what we have. So if we call this X, if we call this X, That's X. So this will be A. Right? And then that means here will be B. Then here will be C. And here will be D. All right. So we say C is a retracement of AB and D is a retracement of XA. So this is correct. All right, this is correct. In other words, we are looking for an opportunity to sell. So this is a Gartley. This is a Gartley. Yeah, it is. So what are we going to do now? But why did I choose this point as my X? I told you your foundation, if the foundation be destroyed, what can the trader do? If foundation be destroyed, what can the trader do? So this guy cannot be randomly chosen. You don't choose it like that. There are fundamental principles that outlay the choice of your X leg. And the key fundamental principle that outlays the choice of your X leg is that it must be either the high for a sell trade now, highs are more important. For a buy trade, the lows are more important. For a sell trade, the highs are more important. For a buy trade, the lows are more important. So when you want to sell, the X leg should be the high of a particular period. So I am on a daily time frame, and this is my period separator on the daily time frame. Let me remove it. So without it, the trader can make a mistake. Without that period separator, the trader can make a mistake. As a matter of fact, like what I tell my mentee students, I say the only indicator you are permitted to use is your period separator. Well, it's not an indicator, it's an analytical tool anyway. So it's not an indicator. Don't put, you see how my chart is clean. This is how we trade. You cannot carry moving average and carry Bollinger Band and Bollinger Travel and carry RSI and lobby stars and what do you call it? Market, what do you MACD, whatever, and put on your chart. And you say you want to see price. How can you see price when you have used your own hand to block price? So we use the period separator to help us identify the high of a period and the low of a period. So this X apparently is wrong. If I have to use this period, then it means I have to move my X to this point. You see that now? Shebi, you don't see it. This is it. Are you following now? So now, because I am on this time frame. So, but then, yes, high for sell and low for buy. Thank you. But then, so this becomes my X. That means if this must be my X for this journey, for me to say that I will have a Gartley, if I draw my Fibonacci from X to A, X to A, X to A. Oh, this is another chart. Oh, this is not the chart where I fixed my Fibonacci levels. All right, so let me put these Fibonacci levels here. X to A, this is 78.6, 78.6. This is 88.6. Okay. This is 61.8, approximately 62. All right, let me add 50, 0.5, which is 50. And also add 0.38, which is 38.2. All right, good. So I've set the Fibonacci levels here. Now look closely. If this is my X to A, you can see I drew my Fibonacci from X point to point A. If this is true, which it is, because it's from a high of a certain period to a low of a certain period, it means for me to have a Gartley trade here, price must rise to 78.6. By coming to this low, this price would rise to 78.6 before I can get a Gartley that is connected to this high. How many of you are following now? How many of you are following now? For me to get a Gartley connected to this high, price must rise to 78.6. So if price reverses here, then it was not using this high for the Gartley representation or for whatever representation. So the question now is, this is a 61.8 retracement. Could there be a reversal from here and then what? I don't know. All right, now, so let's check again. What if I move my X? So I cannot be using this high, neither will I use this, neither will I use this, as long as this D retracement is concerned. I'm trying to check this D retracement. This is another high. This is the high of this period. This is the high of this period. So let's check. If this is the high of this period, then it means this is the X leg. So now I pick up my Fibonacci and I pull from this point down to my X leg. And when I pull down to my X leg, what do I have right there? Fellows, what do I have right there? At what point is the market breaking a D? Look at the D leg. This is D here. All right, this is D. At 78.6. 78.6. 78.6. See, the market is not scoring above 78.6. It means we should begin to expect a sell there at 78.6. Are you following now? So from this point, we should begin to expect the market to fall. So the market made a move from X to A, giving us a cutback of 78.6. That is number one confirmation. That is number one confirmation. Remember, your X must be the high of a period, the period that you are in, or the low of the period that you are in, depending on whether you are buying or selling. You understand up to this point, type 5 to represent high 5. If you understand up to 4, it's not a high 5, put 4. If you understand up to 3, type 3. Good, good. I'm seeing a lot of 5. Don't be intimidated by the 5. Oh. Please, if it is 1, 2, type it, let us know so that we can take your question. Onyin Damola All right, she says 2. All right, so Indamola, can you unmute yourself kindly and then ask your question? 2 is below average. Ask your question so that we can address it. Please, thank you. I'm waiting for you.
Please, can you kindly rephrase your last statement?
Okay, my last statement, is that the only issue you have? I now said 2.
Yes.
Okay, my last statement was, Oyindamola, would you kindly unmute yourself and ask your question? That was my last statement. Is it clear now? Hello? Oh, she's gone. I think she's here. All right, so Oyindamola actually, and then to others who probably did not get it clear, what we are saying here is that your X leg is very important for any pattern you want to draw. For any pattern you want to get, the X leg, the X leg is the beginning of your diagram representation. All right. I use this triangle. This triangle is an analytical tool. When you pick it up, it has, you can see +1. You can see a plus. You can see a triangle is holding a triangle and having just 1 at the bottom. So if I click, anywhere I click, so if I click 1 click, it will leave a plus there. Now it has changed to 2. If I click the second time, it's telling me I have 1 more click left. It's looking for where I will place the 3rd click. If I click here, you see it's gone. It has left a triangle for me. That's just what I use in doing this, okay? And I did it twice. So I use the triangle, put on X, put on A, and put at this high point B. Then I pick the triangle again, put at B again, put at C, and then placed at D. Then that was how this pattern came about. So when you go, you'll see that it was something like this that is on the flyer of the program, okay? So, but how do we know that this is a Gartley? We can only know that this is a Gartley by its measurement. We can only know that this is a Gartley by its measurement. So how do we now measure it? We measure from a periodic high. So if I want to measure, for instance, this strip to this retracement, I'm going to start from this high, then to maybe this low. Okay, all right, now not use that low. I use this low, maybe, and then use this high, maybe, or whatever, okay? And then come back to this high, go back to this low, and then, oh, sorry, I just missed my drawings. I'll go back to this high, to this low, and back to this high. And this is actually a cipher, but today is not cipher. All right, okay. So now the important thing is that if I must start my X must begin from a high if you are selling, or begin from a low if we are buying. Let's assume that we want to buy. Let's assume we want to buy like this. I have to do something like this from this low to this high, and maybe to one low somewhere around here. And then finally, this low to this high to this low. I'll come to explain all that. So, but the important thing is that your X leg is the low of a period. So this will be wrong to draw. For you to now start drawing your Fibonacci, you do like this. You say from this low to this low, from this high to this low to this point, and then you do this, this to this to this, and you say not because it's small, no, and you say this is a whatever to sell. You will be wrong. Why? Because this is not the high of a period. This is not the high of a period. The real high of a period is this point. You see that now? That's the high of the period, is that point. Okay? So you must start from a high to low. The same thing if you want to sell. Look at the sell. A sell, I must begin from a high to low, something, and then get the next one, maybe like this. Wow. This is a butterfly. I've already seen the parameters. I know the measurements in my head. I don't need to use Fibonacci. I already know the measurements in my head. This is a reversal. And the market fell like Nebuchadnezzar. So why? This is the X leg. The X leg has to start from a high of a period. So it doesn't matter whether you are in daily time frame, H4. So if I go to H1, for instance, if I go to H1, good. Now look at this. Look at this system. If I go to H1, look at this H1. If I start from this high to this low and to this high, I'm correct, because this is the high of a period in H1. And if I go now from that point to this low and back to this high, I am correct. Do you also know that if I do not use this high, but decide to use this high, I am also correct? Why? Because this high is also the high of a period. The question will now be, if you are saying is this high, then check your retracement. I pull from this high to the low. And the retracement I got here is just perfect. It's a 78.6 retracement, for goodness sake. This is H1. It's a 78.6 retracement of that X leg. That is a Gartley. Next is to confirm it by the second touch. You don't just jump. There are two confirmations that you use the Fibonacci for. We have other confirmations, but I'm going to teach the two confirmations that you use the Fibonacci for. All right? So, but what if Oyindamola was using this high? So if Oyindamola was using this high, it means my measurement is going to start from this high to this low and back to this high. So what Oyindamola has for measuring from this high, because this is a very correct high, because it's a high of another period. The first candle here is the highest candle in this period. So she started from this high to the low and on and on. But the retracement is now 88.6. This is no longer a Gartley. This is no longer a Gartley. Rather, we go and check which pattern is this. Hey, which pattern is this? If we go down by one move, we'll see that what Oyindamola is treating is a bat. 88.6. 88.6 is a bat. But we have not confirmed the second leg. To confirm the second leg, we will need to check the extension of B to C if it will give us 161.8 to 261.8. So let's check that. This is the second confirmation. You check the B to C. The first, you check the X to A to give you 88.6. The second most important confirmation using the Fibonacci ratio is to check B to C to give you 88.6. That's why I told you that when you are on a sell, the highs are more important, not the lows. So we must check these two highs, X and D. And checking X, we say that the X must come from a reference periodic high. And in checking D, we say, okay, X to A, D will give us 88.6. Second check, B to C should give us this extension, 161 to 261. So let's check the B to C if it gives us 161 to 261. All right, so this is the one our friend is using. This is, let me label it. This is X. We're rounding up and I'll take question. So just be calm. You can see how long it's taking us. This will be A. This will be B. You can do this on your mobile phone. Yes, you can. You can do this absolutely on your mobile phone. All right. See, but it is more stressful. But it's what everything I'm doing here can be done on the mobile phone, whether Android or iPhone, or even the new one that Elon Musk is saying he wants to produce. If Apple and Android decides to ban Twitter, because that is their new plan. Apple and Android want to come together to remove Twitter. He said if they do that, he's going to get his own phone. Anyways, that's not the subject of our conversation here. So right now, we have gotten X to A to give us D at 88.6, projecting a bat. Projecting a bat. But let's check and confirm if it's truly a bat. If it's truly a bat, we will now check B to C. If we check B to C, will it give us 161 to 261.8? So when we check B to C, I draw from B to C. All those things you are seeing TP. I didn't put 261 and 161. So let me go and put them. This is 2.62. All right. This is 262. All right. 1.62. Okay. This is 162, 161, and 261.8. All right. Let's check. So you see now, B to C created, this is a 161 to 261. Perfect. 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 So what of the person that was seeing a Gartley? Let's check. If you were seeing a Gartley from here and you drew from this high to this low, it gave you 78.6. Check your second confirmation of a Gartley. What is B to C of a Gartley? Friends, do you remember? It's the same thing for a bat. But let's confirm. On a Gartley, on a Gartley, it's 127 to 161.8. 127 to 161.8. B to C will give 127 to 161.8. So let's check. B to C, 127 to 161.8. Do I have 127 to 161.8 on my Fibonacci? If I don't, I'm going to add it. So let's go here. Let's add 127, 1.27. Here we have 127. All right. Percentage dollar. I already have 161.8, so I don't need that again. Good. So, oh, I didn't okay. And that was why it didn't stay. 1.27, 127. the percentage dollar. Okay, good. So we say that B to C should be 127 to 161.8. But friends, did it go beyond 161.8, guys? As you can see currently, the market went beyond 127, went beyond 161.8, went as far as 261.8. Is this still a Gartley? Hello? Is this still a Gartley? No response? Are you guys there?
No.
It's no longer a Gartley. Thank you, Bosco. It's no longer a Gartley. Why? Because the B to C did not confirm it. X to A confirmed it, but B to C did not confirm it. So yours truly, this is not the main X point. This is the X point. This is the X point. But for those of you who have traded harmonics pattern, how many persons would have quite said, understood that I could have actually started my X from that leg? That's the high of a period. So technically, that's your high. And this is your D. So this is a bat and not a Gartley. This is a bat and not a Gartley. So let's take another example. We're looking at this example on D1. So let's check. We have just checked from X to A to get 78.6 on D. That's not enough. So 78.6 is telling us it's a Gartley. But we need to confirm the Gartley with the B to C to give us 127 to 161.8. So let's do B to C here. B to C here gives us 127, 161.8. It has not reached 261.8. After 161.8 is only when it gets to 261, and of course you can see that if it even gets to 261.8, all right, this is no longer a Gartley because X has been extended. Are you guys following now? Yeah. So this is still within the range of a Gartley. That's why, this is why I said it will stay within range, not by exact number. You can see it's kind of broke a little bit above the 161.8 range, extended a little bit and all of that, pushed a little further. But if we are going to use this high, it means in the first place, technically, we have not even reached a point to even talk of Gartley or to even talk of BAT. So because you have to talk about Gartley first before you talk of BAT, because Gartley is 78.6, BAT is 88.6. So here price has not even reached 78.6, talk more of getting to 88.6. All right. Okay, then. So that's one example. So somehow we are already treating Gartley and BAT. Let me take a few more examples. I'll look for buy opportunity, sell opportunity, any time frame, what have you. So now, for some reason, you want to take a trade. Let's look at this scenario. All right, you want to take a trade. You now do this measurement. Say you take this, and take this, and then you take this. You know, this is what they will just teach you. Oh, but we have a Gartley here. And then from here, the market started buying. Oga, this will not happen in real life. If you try this in real life, you will run into a disaster. All right? It will run into a disaster. This is not a Gartley or BAT or whatever. Why? This leg is a wrong leg. A very wrong move. A very, very wrong move. Yes. If there was any move it should start, it should at least start from this bottom. Not from that low. Your low must be confirmed as the low of a period. Your low must be confirmed as the low of a period. Okay? All right. So whichever way I want to go, I can go. Let's try one here. So this is the high of a period. This is the high of a period. This is the high of this particular period, not this high. So to do this is wrong. Doing this is typically wrong. I say, oh, this is a bat or a Gartley and it's sold. It's wrong. This is not correct. Because this has already happened and you are using it as an example. So I'm showing you something so that you know when it comes to real life. This is the science of it. In the art of trading, you know, so here, this is not the high of this period. This is the high of the period, not even this one. So you can't come here and then place it on this high and say this is the high of a swing. I mean, that sounds like lame. It's not because it's the high of a swing. It's not the high of a period, for goodness sake. This high has no sense at all on it. And a lot of traders make these silly mistakes connecting this as a high or a top. This high has no significance whatsoever regarding this period. If there's any high regarding the periods here, is that guy here up here. And if there's any high on this period that is of importance, is this one, not that one. So I have to come down. It just looks a little inch away, but we just have to do the right thing. So this is what we have. Now, if we have this, then we take our measurements. And if we do our measurement from this high as A to this low, what we have up there is a 78.6 retracement. A 78.6 retracement. A 78.6 retracement. Now you need to go confirm the move. Your next move will be confirmed from here. B to C, and let's see. But B to C produces a 261.8 retracement. A 261.8 retracement is a bat, not a Gartley. A 261.8 retracement is a bat, not a Gartley. A Gartley, I want to end this class now. Let me show you. I want to end this class today. Now, let me show you something. A Gartley will terminate at 161 here. 161. This 161.8. That's it. Look at the line here. This is where Gartley is supposed to stop. It starts from 127 to 161. How do I know that a Gartley will stop at 161? It will get exhausted before it gets to this area. But you can see these candles were pushing strongly through 161. It doesn't show exhaustion. I'll talk about that tomorrow. But by the time it started approaching 261.8, we begin to see exhaustion of the candles, showing us that this is actually a bat and not a Gartley. So there are more things we need to learn tomorrow before. This is all we've done today, and even with much speed. I just hope that everybody was carried along. Everybody must have, and I don't think everybody grabbed everything I said today, but the video will be available in the next 20-30 minutes after the class. It will be available on our Telegram channel at Dovelight FX. So just go to our Telegram channel, Dovelight FX. If you have not joined, kindly join our Telegram channel. I will make the video available there. All right. HTTP column or whatever. Where is the somebody drop the Telegram channel, please, on the group, on the chat. HTTP column/t.me/dovelightfx. All right. So that's the Telegram channel link there. Kindly join the Telegram channel. The video will be available on the Telegram channel 20-30 minutes after this class. In conclusion, we've done Gartley and BAT. We will harmonize it better tomorrow and then talk about cipher more deeply. But what is important in identifying is, number one, know your X leg. Identify correctly your X leg. And number two, confirm your D leg. Identify your X leg and confirm your D leg. The X leg is the starting point of the structure, and the D leg is the termination of the structure. Your starting and your beginning, your ending are very important. There are arguments that the end of a thing is better than the beginning. That's true. Some say how you start will determine how you finish. That is also a true perspective. However, if we harmonize both perspectives, it therefore means that your beginning, how you start, is important. How you end is also very important. So we do not throw away A, B, C, and the rest of them. No. But most importantly, the bedrock and the foundation for a quality harmonic setup is identifying your X leg, which is the high or the low of a particular period that you are in. And the D leg must be confirmed using your B to C extension. B to C extension will finally tell you whether this is a BAT or this is a Gartley or this is a cipher or what have you. Thank you very much, and I'll take your questions now. Questions? Hello. Anthony, Bosco, Dan, Elvis, Emmanuel, Mr. Emmanuel Udo. All right, somebody's raising hand. Unmute yourself and ask your question, please. By period, do you mean sessions? No. By period, I mean period separator. I mean the period you have on your chart. So if I'm on monthly, I'm looking at the monthly period. So on a monthly period here, if I'm on a monthly time frame here and I want to find a pattern, all right? For instance, I can say, okay, this is my low and this is my high and this is my next move. And then that's from here, down here, and then down there. All right. So I can now safely say this is the low of this period. This is monthly period separator. This is a monthly period separator, and this is the lowest part of the monthly period separator. Okay. So in essence, if I say that, look at this, friends. Wow. Wow. This is a 62% retracement. It has not reached 78.6 to say it is a Gartley. 88.6 is what will tell us that it is a BAT. So what does this mean? It means the market might probably still come down. All right. If we look at this, there was a sell opportunity here. It would be wrong for me to do this and do this and do this, and then come this way, do this, and do this. Now, by what I've just done, sorry, this, and this. By what I've just done, this is like a cipher, which I'll talk about tomorrow. The X leg of the cipher is wrong. Why? It's not on the high of the period separator. So if yours truly, this is what I'm supposed to have. Are you following now? That is what I'm supposed to have. Yeah. So that's what we mean by period, not session. Thanks for the class, but showing us those patterns manually. After the class, you will share the harmonic indicator. What will the what will indicate those patterns automatically? What will indicate them? The indicator will indicate them. The indicator will indicate the patterns automatically for you, but you just need to understand how to use them and then how to confirm it. It's important you follow through on this class. All right. Thank you, Elvis. Any other question? Any other question? So if I'm on a weekly time frame, the weekly time frame also has its period separator, which I must respect. So I cannot come to the weekly time frame and begin to draw a pattern. Say, okay, this to this to this. Why is and then this to this to this, and I say I've got a pattern. This is wrong, absolutely wrong, completely wrong. This is not the high of this period. Maybe if I go to daily time frame, that might show clearly. All right, that might show clearly. What did I draw then? Okay, so now here I can see that this is the high of a period, and then, oh, good. But then you can see that this didn't even make any retracement. So in real sense, if I come down here, no way, this is the high of a period. Yes. So looking at this, now I think I have an opportunity here. All right. I think I have an opportunity here. So when I pull, because this is the high of a period, down to this point, all right, and I get my levels, I come this way to confirm the retracement of this. And when I do this, you can see that this retracement is a 1 to 7, and 1 to 7 is what? 1 to 7 is a Gartley. So exhaustion took place at 1 to 7. 1 to 7 is a Gartley. 1 to 7 to 161.8 is a Gartley. So this pattern is a Gartley, and the market sold. Is that okay? Yes, thank you. All right, will you cover TP tomorrow? We'll talk about entries. We'll talk about entries. I hope time permits us, because we still have one more to cover, at least so that we finish the continuation pattern. Maybe in another series, we'll deal with the reversal patterns. I mean, harmonics is not something you learn one day. So is there a specific number of periods that should be combined to get a harmony? No, it depends on the period that you are in. It depends on the period that you are in, but sure to tell you, it's just impossible for you to, like, I'm on a daily time frame. All right. Take, for example, I'm on a daily time frame, and you say you get your harmonic pattern all within one period. No, it's not possible. You need a minimum of 2 periods at least. 2 periods, like from this to this. You need a minimum of 2 to get your harmonic pattern. I hope that answers your question. Who asked that question? Okay. All right. So your confirmation from B to C was great. Thanks, TVHM. Thank you. Thank you. All right. So any other question?
Yes, sir.
Go ahead.
Okay. Honorable Village Headmaster, thanks for the class.
Hey, Uncle Bosco.
It's beautiful as always.
Thank you.
Okay, so, but sir, my opinion though, I don't think this class have clearly, identify the science of picking your X.
Okay.
Because I'm not sure some of us can confidently, pick our X.
Okay.
Thank you.
All right. So I can agree with you boldly that not everybody, some people will still go back and make the mistakes of picking their X. Like I said, X is the foundation of the harmonics pattern. And to cap it, the capstone of it is your D. X is the foundation, D is the finisher. If you get any one of these two wrong, your system is wrong. If you get any one of these two wrong, the system is wrong. I'll do my best in tomorrow's class to emphasize and expand more how to pick your X correctly. I'll talk about it more, and how to clearly, all right, define your D point. Even if we do not have enough time afterwards to even talk about entries and exits, please, I beg your pardon. The program, I don't just want to rush it through. It's for you to know that there is something you can go home with, all right? And we can have continuation series or whatever, or what have you. But please note that your X and your D are the most important factors of finding the harmonics pattern. When you have found the harmonics pattern, then we can now start talking about entries and exits. I mean, it's been wonderful. Let's, I don't know, maybe, all right, tomorrow I'll talk about it, not today. Tomorrow I'll talk about it. There are certain wonderful good news. You can be a solid trader and then beat your chest and say, you know what you're doing. Yes, you can. You can. Yes, you can. And opportunities are available today, unlike before, when traders have to fight to raise capital to fund themselves. Like I've always said, the United States of America formed the basis for us using credible funds, as it were. They give the regulations. You cannot start trading without having a minimum of $5,000 in your trading account. But in today's Nigeria, for you to find traders to raise $5,000 to start trading, all right, maybe a few among the trading tribe, all right? So what do the others do? And the brokers are telling you, sign up with $15, $10, sign up even with your coupon, all this kind of stuff. I mean, those are scams. And at the end of the day, you lose your little money because you are talking about a leveraged market, all right? But today, companies have come up, what we call them prop firms, and prop firms are all over, giving traders opportunity that they can be funded if you only know how to trade. Why don't you now learn how to trade very well so that you can get funded? That's the secret. So why stress yourself to try to use $100 to make $100 at the end of the day? That's scam. That's scam. Why are you trying to trade with $50 and think that you can manage it effectively? You are deceiving yourself. Yes, I repeat, you are deceiving yourself. So if you know that you can be funded, I mean, there are quite a number of prop firms that fund from as low as $5,000, $10,000, $20,000, $50,000, but they give you a valuation. Then why don't you join a team that can help you cross your evaluation and get funded with real cash? So, I mean, why? I have a lot of why questions for you, like seriously, why? So why do you still want to force yourself to trade $300 in your trading account when with $300, you can actually get a $50,000 account? All you need to do is probably pass your evaluation. So why don't you learn this stuff, learn the science, and learn the art? They are two different things. So even if I go deep tomorrow and finish deep, even with the depth that I go, Ogbeni, science and art, they are not the same. No way. Don't be deceived though. You can learn the science by, if I give you this slide, you can study, some of you can study it by yourself. Some of you may not be able to study by yourself. You need somebody to teach you. But when it now comes to live, you now ask TVHM, so why should we take this trade now and have confidence in this trade? Why should we not take this trade and have confidence in this trade? After asking the why, then you now say, TVHM, we are take this trade on your live account. Let us see. Then TVHM will now take the trade. Then when he takes the trade, then you now go and take the trade. That is how to learn the art of trading. The art of trading, I will blow you, you will blow me. We will feel the pain together. That is art, not science. So I want to encourage you, be in the class tomorrow, but do the best you can to join an art class. The science class will be ending tomorrow. All right, so can D leg be a high or low of a period? D leg must has the emphatic word that is missing in your question. D leg must be the high or the low of the new period. I hope that answers the question. So, wow, it's 4:42. Tomorrow we may not have all the time. Today we spent 1 hour 42 minutes. Tomorrow I want to join quite early. It is going to be 8 p.m. Nigerian time as well, but I will be ending the class exactly 9 p.m. Nigerian time, because at 9 p.m. Nigerian time, when I'll be ending that science class, I have an art class with my art students from 9 p.m. Nigerian time to about 11 p.m. Nigerian time, because we'll be waiting for the market to open and we take actions. Next week, for those of you that are already in the art class, next week, there are mouth-watering opportunities. I can guarantee you all in the art class 2 to 5% profit on your account. Guaranteed 2 to 5% profit on your account next week for those of you that are in the art class. Not ACT, ACTO, ART. ART, all right? Not ACT of ACT, is ART. Those of you in the art class, guaranteed 2 to 5% next week. So get yourself ready, get your account set. Trading will begin from Monday and spree till Friday. We'll be breaking profits like papa. You saw what happened. Those of you in the Telegram channel, you see the post that came up on Thursday and Friday. 10 trades, all hit take profits flat, and next week is not going to be any different. I'm putting my seal on it. Thank you so much, guys. Thank you for joining. If you learned something, just type something for TVHM. If you learned something, type something. If you learned something, type something, and then invite people for tomorrow's class. It's going to be great. For those of you who want to be part of the art class, you can reach me on WhatsApp at +234 816 558 3332. Am I correct? Yes. Yeah. +234 816 558 3332. +234 816 558 3332. Join the Telegram channel. If you are not there, the video will be posted in the Telegram channel immediately after the class. All right. Can you show the slide for the fee values again? We keep following. Okay, so thank you very much for joining. For those who want to see the slide for the fee values, I am pulling it up for you. Yeah, so this is the slide for the fee. You can take note of it. Thank you so much, guys. Thank you. Thank you. Thank you. Thank you. Thank you.